All right. Break time's over. Back to work. Let's get ready to make some money on Wednesday. It's Tuesday evening after all. It's the 5th day of April, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, if you're tuning in for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video for you guys tonight. Charts are already in the background, as you can see. We got the oil, got the Nasdaq, and we got the S&P on our radar. Lots of great trades setting up for Wednesday's trading session. We get some big news tomorrow. And boy, some big moves on the charts today. Days like today with big news on the horizon tomorrow always get me excited for some money-making opportunities tomorrow morning in our trade room. I'm going to cover all my favorite trades in tonight's video. That way you know the game plan to make some money tomorrow. And you know me, I'll also make sure to cover all some traps to avoid so you can finish off the day in the green tomorrow, whether you're trading on your own or you're trading with us tomorrow in our members trade room. But before we jump into the video tonight, we've got a lot we're going to cover. Make sure you subscribe to this YouTube channel. Set those notifications because, I publish all the good stuff, all my best trade ideas every evening on this video newsletter. I don't want you to miss tomorrow night's video. So make sure you subscribe. Set those notifications that we always get updated every time we publish something new. And also, too, if you have any questions, drop those questions in the comment section. I do personally answer all the comments in the comment section, so don't be shy. Drop those questions if you got them. And as always, I appreciate you guys tuning in tonight. If you enjoy this video as much as I enjoy making it, hit that like button, smash it if it's something you're into, and I really appreciate you guys supporting this YouTube channel and tuning in every evening. But enough of the intro, though, right? Tuesday's done. Wednesday is right around the corner. There is definitely some money to make on Wednesday. These charts smell like some nice, easy winners going into Hump Day Wednesday's trading session. What's where is the easy money here right now? Well, I'll tell you, boy, what a difference a day makes. Everything bearish here today. Got the bears in control on the Emini, bears in control on the Nasdaq, and of course, bears in control here on the crude oil. Now, obviously, whenever we have these big, strong moves like this, we definitely have options to sell pullbacks right now. And we'll have some options here to short this. But you're going to see tonight in the video, though, how there are a lot of reversals. I have an overshoot of a measured move, a pendulum swing. We're going to talk about all my favorite reversal trades for tomorrow, all the pullback trades, and we'll cover everything in between. Now, speaking of tomorrow, right? Tomorrow's a Wednesday. I mentioned we've got some big news tomorrow, and we definitely do. We have two big news reports tomorrow. If you're an oil trader like we are in our trade room, you've got the weekly inventory report at 10:30 Eastern Time. Remember, you're going to want to bracket this news report by about 10 minutes on both sides. So 10:20, the alarm goes off. We're sitting on hands until about 10:40, and then we can get back after it tomorrow on the oil. This, of course, will not apply to anything besides crude oil. And then, of course, the big news of tomorrow, you could argue, is the FOMC meeting minutes. In fact, rumor is the markets have been relatively low volume this week as everybody is waiting to see what the Fed is thinking about inflation right now. Remember, the last few months, we've seen inflation really skyrocket. But just the last few weeks, the Fed speakers have now started talking about aggressively raising rates. So a lot of traders will be watching and listening in to how that news looks like tomorrow. And so we definitely look forward to kind of a late afternoon, 2:15 to 3:30, probably one of the best times to be a trader here tomorrow. So definitely don't forget about the afternoon session tomorrow. Remember, though, you want to bracket these news events, right? So 5 minutes before, and then I would say probably give it about 10 minutes, 15 minutes after that news comes out. Let the dust settle, and then we'll get back after looking for trades around 10:10, 10:15, 2:10, right, 2:15, and of course into usually about 3:45, 4 o'clock is when things will start slowing down after the FOMC meeting minutes. Now, of course, don't forget, we saw a great example today. We had a peppering of Fed speakers today, a lot that were scheduled, a lot that were unscheduled. We've got Harker tomorrow. at 9:30 Eastern time. Remember, there are some really kind of big known unknowns right now. Ukraine is a known unknown, and of course the Fed speakers are a known unknown. What I mean by that is we know that at any moment tomorrow, and really the rest of the week here this week, we know that we may see some new headlines out of Ukraine. Right now, they're talking about sanctions on Russia right now. We may hear more headlines, more unexpected headlines out of Fed speakers. You know, we saw. I think it was Barker. I think it was Barker today that talked. He was speaking at about 10:15 this morning, and really dumped these markets. So these are two of the known unknowns for tomorrow. Ukraine is definitely something on our radar, and of course the Fed speakers. We are listening in very closely to our real-time data feeds in the trade room right now, because everybody's obsessed with the Fed, and the Fed, of course, being obsessed with taming this inflation problem. Don't forget, tomorrow morning we'll be in our trade room, 8 o'clock Eastern time. You better come out and join us. That's where the good stuff is every day, Monday through Friday. Let's get back to our charts, though, here, because that's where the money is, right? Everything's bearish right now, but like I said earlier, there's quite a few really nice reversal setups we have on this. Now, guys, whether you trade one of these markets or you trade all of these markets, I'm going to cover all my favorite trades throughout the entire video tonight. We'll go 1, 2, 3, write down each of these markets. You're going to learn something new in each section of this video. I'll provide different trade variations, different more advanced tactics, and I usually do save the best for last, so I'll definitely make it worth your while to watch all the way to the end. So again, whether you trade all of them or just one or two of them, don't forget, watch this entire video, because I'm going to be spicing it up, giving variations. You'll learn something different throughout the entire lesson here tonight. All right, let's get into the S&P here. We'll go S&P, we'll go Nasdaq, and we'll wrap things up on the black gold, the Texas tea, the crude oil futures. What's the most important thing happening here right now on the E-mini S&P? I would say there's a couple really, I think, very important clues on this. One is we're very bearish right now. It's a very strong move down, and we have to remember that anytime we see a real strong move in one direction, we know the odds are pretty good we're going to go up, see bears come in at areas of resistance, and they're going to want to retest that low. You know, this is kind of the opposite we saw yesterday. Yesterday we saw that big move up, and we knew we'd probably get the bears coming in, buyers, and retest that high, right? It's kind of the same idea here. That's one very big important part of this. Strong move down says expect to see some resistance hold and have a retest of that low. That is one very important clue on this chart. Here is another very important clue, and you could argue this might be the most important clue on this chart. We always talk about how the fact that trends come in threes, right? Trends come in threes, and how the first leg will oftentimes equal the third leg. There's your one leg, two leg, and three leg. Well, here we have what's called a measured move overshoot. These are very small but very important clues, and they are remarkable how reliable they are. You'll notice if you look at this area right here, you'll notice how the market hits the measured move, pulls through it, and then comes back and holds it again, right? See it right there? Hits it, pushes through, and holds it again. What happens in these situations is that this whole area now becomes basically a support zone. So think of this area right here, right? Think of this area right here now as basically one big support zone here. I can make it green here real quickly if I can quickly do that enough. I don't think I won't have time to do that for you. But anyways, that's a support zone. Now think about this now. The sellers, they have that big strong move down. They want to get back to retest that low. How can they do that if you have that measured move sitting right there? And you can easily see it's there because they held it once and they held it twice. The bottom line is that when we have a measured move overshoot, We know that bears, in this case, would love to retest that low, but they oftentimes have a very difficult job to do it. Oftentimes, they'll hold and bounce off that measured move, and that creates a rising support trend line. That leaves the door wide open for a big short squeeze going higher. That is a really, really big and I think subtle, but probably one of the most important clues on this chart right now. I also think it's worth mentioning too that if you look left on this, we had this big move down today. Remember, we had this big move down last week. Why on earth did we not finish the move? It just seems like, if you want my opinion, it seems like they're trying to generate some sort of range right around that 45, 45, 45, 40 area. You'll notice the last 2 weekly closes. These little blue lines here are prior week closes. You'll notice they're right on top of each other. So you can see why I'm very hesitant right now to say, let's get aggressive and sell this market right now, because again, the measured move overshoot, the lack of follow through at this low. Again, this is a bear market. I'm looking for some shorts right now, but it's not going to be as easy. We're going to have this trend line coming up off of that low. So how do we trade this right now? What do the buyers want to do? What do the sellers want to do? The buyers, right? The buyers want to buy this bounce. They want to buy that bounce. The buyers want to buy the reversal. The sellers, of course, they want to get up and sell back down, which is definitely possible, but we have to be careful on that move lower. What about a breakout going lower? Remember, we have a lot of support down here. This is that big low over here. So even if this market runs lower here right now, the buyers still have options to buy it back up. The sellers really have a tough job right now. They have to break down and hold in order for us to be able to really take these bears seriously below 4,500 and then potentially down to that 44, 55 level as we go. So how do we buy it? How do we sell it? What's the, where would the money be here right now? Let's talk about as the market goes higher, because it does look like that is probably the most realistic thing that we're going to get here right now. As the market goes higher, there are quite a few different buying opportunities that I can use on this. For example, we always talk about these 2-try breakouts. So strong move up, shallow pullback, higher high in price. That trap is an easy way to grab that next leg higher. Think about a measured move, 1 leg, 2 leg for that move going higher. I would also think too, as the market pops higher, we may definitely see one of those pop and grind reversals. Pop and grinds, mark off that high, mark off that low, and then remember on these kind of pop and grind where it grinds higher like this, what you want to do is drill down to your faster time frame, find some of those prior swings, and repeat after me. The first test is always the best test. Now, these types of grinders kind of grind, right? They kind of break out and they grind higher on this. What you can do is find that prior swing, use those prior swings for a trap setup, and then look as we get underneath the moving average, wait for the sellers to come in and get them to try to go short. Once they try to commit short, now we know where their stops are. We can use a failure pattern. We can then use the pullback off the moving average for that pullback combination. So again, pop and grind as we go higher. Grab that trap, grab that failure, grab that pullback combination. Where do we think the buyers want to go? The buyers want to go back, basically right back where we came from today. We may have another complete reversal going higher here. Now, guys, I know most of you have already, I know most of you guys tune in every evening. You watch every evening. You know all the rules of these entry setups that we cover in the free trading course. But if you're here for the first time right now, or if you haven't taken that free trading course, if you haven't learned all the best entry setups, the rules, when to take them, when not to take them, what I'll do is I'll put a little pop-up there for you in the upper right-hand corner. Grab that little link right there. Learn all my favorite entry setups. You'll learn the roadmap we use in our trade room, all the favorite entry setups, the rules we use, when to take them, when to skip them, and most importantly, you'll see hundreds of examples of things like this, right? Of like a pop and grind and how I like to find that hidden channel off the high, how I like to drill down and find those traps. So the next time I say pop and grind into a trap, failure, or pullback combination, you grab that free class I mentioned in the upper right-hand corner there, and you'll know exactly what they look like on the right entry times, right? Because obviously this is a 6,000 tick chart. We're not trading off a 6,000 tick chart, okay? We'll trade down to a faster time frame, and you'll learn more about that in that video course. All right, as we go higher, here's another one. Here's another easy one. Let's say we pop up here now. The buyers come in, they hold that pullback, and they jump off the moving average. What do we call these? We call these 1, 2, 3 reversals. 1, 2, 3 reversals. Then what do? You mark off that high, you mark off that low, right? That hidden channel. Find those prior swings, try to get under prior swings, get underneath the moving average, and same thing, right? Just a little bit different pattern variation there. And again, as I always say, remember, trends love the number 3. One leg, 2 leg, 3 leg. We know that first leg is oftentimes equal to that third leg. So that will give you an idea of kind of how to really fine tune that exit target if we can get into that thing off the low of that 1, 2, 3 reversal, and then first test off the low of that channel. You'll see a lot of first test examples in that free trading course. Now, how do we sell this market as it's going higher here? Because after all, I mean, look at it. It's a very strong bear move down. How do we sell it now? Well, you're looking at this rising support trend line, right? So you can see here, and this is one of the biggest reasons why these measured move overshoots are oftentimes very likely to produce reversals, because now, as we have this trend line coming up, as you can see, I can't just sell. Into that area. So here's going to be the safest way, the best way to sell this thing as we go. Now remember, the minute this thing starts to pop and grind is the minute we are not looking to short anymore. Okay, at least not temporarily, right? At least not in short term. Okay, so be aware of that. If it does start to pop and grind, that's going to be a really strong sign these bears have walked away, and we now have a short squeeze on our hands here. However, whenever we have a two-legged pullback, 1, 2, okay, I want you to think about these two types of entries. One is going to be getting underneath that trend line and using it for the short as we go back down. Now, oftentimes, these two-legged pullbacks, we get under the trend line, get up, and then grab it. Oftentimes, you'll see a follow-up trade with a trap set up just before we go back and retest that high. So this is kind of one scenario you want to keep in mind. Again, we go 1 leg, 2 leg. We go well underneath the trend line. I always tell everybody in the trade room that you want to have some daylight underneath that trend line. Okay, what you really don't want to do is, on these two-legged pullbacks, is you don't want to get trapped doing something like this, where it kind of grinds up that, you know what I mean? What you want is, you want it to literally go down, see some daylight, and then come back up. Nice strong signal, and there's your short going lower. And again, remember, anytime we see a relatively deep pullback, you oftentimes are going to see one more add-on entry just above a prior swing, right? We call these traps. So again, a two-legged pullback entry and that trap entry ahead of that retest of that low. Now, here's one more variation of that you want to kind of keep in mind here. Sometimes what will happen is the market will pop up, we'll try to get that underneath and go, but it will just drop. And so in those situations, keep your eyes on that trap. Okay, so for some reason, if we don't get that short off the underbelly of that trend line and it simply drops like a rock, then you know that trap, they want to get back down to retest that low. Now, let's say we do get that retest. Let's say we do go up, we retest that low. Now what can I do here? Do I sell down here? Oh, hell no. No. We don't want to sell here. Remember, that's the objective, right? The bears want to get back down to retest that low. We call this open loop. And close loop. Okay? They open a loop with a big strong move. They sell into that high. They close that loop at that low. We retest that low. Now, can I buy this? Absolutely we can. This is where the best reversals come from. Whenever we see a strong move down, a retest of that low. Now, we're still very bearish. So I still have to wait for the sellers to kind of wrap that, rope around their neck, if you will. I want to use the 2-try failure here. Bears try once, bears try twice. Once those bears try twice, and guys, I have a couple different variations of this. I'll talk about some variations of this pattern setup because there are a few more advanced tactics on this. So make sure you keep on watching. We'll cover that in the Nasdaq and the crude oil. But, the basics here right now, 1 try, 2 try for the bears. Think about where they are. They're at a major area of support. The stops now, all those sellers who are in now, think about where all their stops are. Think about where their pain is. The easiest money you're going to make in day trading is when you have a major turning point, like the low of this move, and you've got bears trapped on the wrong side of the market. Because once they see that big green candle, those bears are not going to hesitate. They're going to get the heck out of that position, and you'll get that short squeeze going higher. Now remember, your job is not done yet. Because once you get that nice strong signal there and we jump in that thing long, now as we go higher, trade the turn, mark that high, mark that low. And you know this already. Drill down, find that prior swing and hit it. I always tell my students in trade room, you may not get the great reversal signal. You may not be confident taking that reversal signal, but this one right here, as it kind of jumps back up again, that new channel is kind of a must-take trade. You know what I mean? It's kind of like LeBron James, basketball, under the hoop, put the ball in the net. That's one of the most important things about that trade. It's a must-take trade. Could be a trap, could be a failure setup, could be a pullback combination. Again, you'll learn about that stuff inside of the free trading course. And guys, don't be surprised if this thing takes off the downside and then same thing. 1, 2, back up, right? Because again, we have all of this area of support here. Okay, how about a breakout right now? What would a breakout look like going lower? I have 4 different breakout patterns on my radar here. Let's talk about those in the Nasdaq, right? Because we're getting kind of late here on this S&P. Just remember though, on the S&P, a lot of support down here. We'll talk about a few breakouts here going lower. If we can crack below this area, and we'll talk about the patterns here in a second, we pretty much know where the market wants to go next. I'm going to take out that next big level down here. There's another prior week close right there. So 44.65, if they can crack this low here tomorrow, looks like a very reasonable area for those bears to want to get to. That's a pretty big ask, though, for the bears right now, the way this chart looks here at the moment. Let's keep going. How about some Nasdaq here right now? How about some Nasdaq? And by the way, if you're enjoying the video right now, do me a favor, hit that like button for me. I appreciate you guys supporting this channel, and hopefully by the end of this video, I will have convinced you to go ahead and subscribe and set those notifications so we don't miss these videos next time we publish them. All right, what do we got here in the Nasdaq right now? What's the most important thing right now on the NQ? We're definitely bearish. That is one thing. It's obviously a bear market. Now notice for a second, would you say the strength of this move is as strong as the S&P? No, I would not, right? I would say they had a very strong move down. They pulled back and retested that low. So you'll notice I wouldn't say it's a strong move. I would say it's a strong bear trend, but it's very different. You know what I mean? Look at the strength of the S&P move, right? See how they separate off that moving average? Yeah, you got to be a little more disciplined trying to trade against those types of moves. The Nasdaq appears to be a lot more ripe for a reversal. Okay, that's one observation. Here is a second observation. We talk about the fact that trends love the number 3. Well, what the heck's going on here then? 1, 2, 3, 4 legs down. No overshoot here, right? No overshoot here. But what do you see? We're 4 legs. Yeah, that's a heck of a move. And I say this I hesitant when I say this. I don't want to say oversold because the markets are the ones that determine whether they're oversold or not, right? No market, we don't have the right to tell the market how far it wants to go. But I'll tell you right now, in most cases, when you go 4 legs, you're not going that much further. Now we might go into a range down here, but the idea now, we may see some catalysts, there may be some headlines that come out. All things equal, If nothing else changes right now, this market should not have a lot more sellers left to want to sell down here. That really, again, another reason why its option for a reversal here right now is very high. Here's a third clue. Trading range. Now, what do we know about ranges? They act like magnets. What do we know about a bear market that goes into a range and then spits below it? What do we know about that? The amount below the range is oftentimes equal to the amount that we slingshot in the opposite direction. So we know there's a lot of resistance up top here, but just like we talked about last night, there's potential for a really deep pullback there. Okay, keep that in the back of your mind. That's a really important clue here right now. Again, we know we're bearish, but with that range above us, what does it do? It creates this kind of slingshot as the market, again, rotates back and forth. What's a third clue here? What's a third clue? What's a fourth clue? Look, I'm not teaching math, right? Luckily, this is not the math channel here on YouTube. Anyways, what's the fourth clue? The spike in channel. You see it, right? This is the same thing we talked about last night. I literally laughed as I'm kind of prepping these charts tonight because I'm going, okay, spike in channel last night, it was a bull spike in channel, bear spike in channel here. What does a spike in channel tell us? Spike in channels are notorious for a pullback into the base of the channel. You take the first pullback off the spike and kind of where that trend line lines up, right, where kind of runs into that spike, that creates the sell zone. Now, just as we talked about in last night's video, I love the idea of buying it on the way into that area and then either selling it back off that level, or potentially we may see, at least like we saw today, we may see this market slingshot here and all of that momentum coming off that range low, okay, that deep pullback into the base. The bears, they may not stand a chance. They may not be able to stop this thing as it goes, which is basically what happened here today. We had that big bull channel, big spike in channel. We got that deep pullback as we thought. But boy, the bears never stood, the bears were too strong, right? Ended up rolling over, strong move down, shallow pullback. Yeah, lower low. What do we always say right there, guys? Traps, baby. Traps, baby. Absolutely. And the baby part is important. You got to say baby at the end. Because if you don't, it's just a regular trap, right? Not as fun that way. Anyways, so we have that going for us too. So really, when you put all this stuff together, again, like I said, we're definitely bearish, but boy, it's just not as easy to want to sell down here. I'd like to be a buyer going back up and then potentially either drop it back down again, which is a really cool setup we'll talk about in a second, or maybe we get that nice reversal and possibly that full move all the way higher. So where do the bears want to get in? The bears want to sell up off this high, right? The buyers, of course, they want to buy that reversal. They want to buy as it goes higher. They want to buy potentially as we're going. How about a move lower here? So just like the S&P, this is no joke. This area right here is again, look at it. It's a very big move down. So, again, this is another reason why I'm very hesitant here. Why on earth didn't we retest that low? If the bears were that strong, if they gave back yesterday's move, they should have really run this thing right down to that 14,724 area. So it really kind of tells us that there may be some sort of range brewing here somewhere, somewhere in the middle of this chart here somewhere. We just don't know it where just yet here. The buyers would love to buy off that low. And then, of course, we may see some breakouts as we go lower here. All right, how do we trade this stuff? Where's the money here? Well, first of all, as we go higher, this is, it's kind of the opposite of what we talked about last night. It's kind of the exact same thing. We're looking for that pop and grind. Okay, so remember, think about it. The bears are going to come in probably pretty hard up around that 15,000 area. That's the pendulum swing, and it's also the base of that spike and channel. So if this thing starts to pop and grind and grind and grind, that's exactly where those little pop and grind channels come in. Mark off that high, find that hidden channel low, grab that, and again, you're going to see a lot of examples of these in that free trading course. Grab that trap. Get those bears to come in, and try to get short off the moving average, trap, failure, pullback combination. And again, first leg, third leg are usually pretty symmetrical, but in this one, we pretty much know exactly where that pendulum swing is, and we know how to get there. I also wouldn't mind either a strong pop up, a shallow pullback, and a two-try trap, as we call it. That would kind of be probably the most aggressive way to do it. Remember, anytime we see a strong move in one direction, a shallow pullback drives the buyers crazy because they want to buy that, Fibonacci pullback, right? And then mark up that high. That higher high basically tells you it's not just a V-top, right? And it's just, like this, right? So if it goes higher here, strong move up, shallow pullback, higher high, as I mentioned before, traps, baby, right? It's great. This is the exact same setup, just the bear side. Strong move down, shallow pullback, lower low. There's that trap as we go. Those are some ways I can buy this thing as we're going here. Now, as we go higher, if we end up back up in this area, okay, there's a great short potential in this area. What you want to do, though, is yes, we're bearish overall, but this is a hell of a pullback. And so you want to use that two-try failure. You want to use the 1, you want to use the 2, and then of course we'll go in, run those stops. Think about where the pain is. Think about if you were a buyer, where would your stop be? And that's exactly where you want to get short. Once we see that nice strong signal, we take that short trade going lower. And then don't forget, your job is not done yet. Okay, find that new channel off those lows. Bring it right around those big highs. Think about where those prior swings are. Get above those prior swings ideally. Sometimes we don't get any swings to work with. Get above the moving average, trap, failure, pullback combo. And where do you think these bears want to go? They've got one thing on their mind. Mission accomplished, back to retest those lows. That's a really, really nice short. I love that trade going short here. Now, here's one more. Okay, here's one more. Let's say, for example, now the market pops up. We get that pop and grind. We get our channel. We get the beautiful pullback, and we grab that first test is the best test. We run right into this area. The buyers try once. The buyers try twice. They fail. There's that, right? There's that failure. But what if they don't fail? What if this thing, because this is very realistic for tomorrow. Again, when you have markets that kind of pendulum swing off the low, a lot of times the bears just don't stand a chance. They could try here, but a lot of times they're stepping right in front of a freight train. So if this market really starts to punch going higher here, what are some things you want to think about as we go higher? Here are 3 patterns you want to keep in mind. One of which, of course, is that strong pop up, which is probably the one that's most likely here. Strong pop up, shallow pullback, higher high in price, because this market could really get going. This would be third day in a row of kind of backfilling over itself. So strong move up, shallow pullback, higher high in price, traps, baby. Right below that low. That's a great trade as we go. Or maybe it pops and grinds. You know this one. Mark that high. Find that big low. Different channel. Okay? Different channel. I very rarely do I ever use a channel twice. What I usually do is they're kind of like single serving channels. You know what I mean? I mark up that one. I use it. Once the juice has been squeezed off that channel, I have kind of a habit of not ignoring it, but really trying to find that new channel as we go. Yeah, that might be similar, but you'll find that most of the time, if you just keep focused on finding new channels every time the market moves in your favor, you'll usually be able to get that nice prime entry off of that low here. Or let's back it up a little bit, right? We may end up bringing it up. The buyers, again, 1, 2 back down, but now the buyers don't fail. They pull back, they hold, and they blast. Okay, this is a really good example right here. You do not want to try to use this big channel anymore. At that point, this is what? It's a 1, 2, 3 breakout pattern. So what do? You mark off that high. Yep, you find that new low, and again, you drill it down, and you get aggressive at buying the low of that new channel. All right, guys, those are ways you can sell it as it goes higher and ways you can buy it as it goes higher here. Now, how about a variation as we go lower? We talked about that move back down, the bears once, the bears twice, and then back up. We talked about that on the S&P. Here's one more variation to keep in mind, and it's a very subtle difference, but this really increases the the consistency, the reliability on this trade. It increases the odds of success on this. And that is a 1 try, a 2 try. But now what I do is I take a trend line off these highs and I bring it down to that major low. And oftentimes you'll notice it won't connect that sub low, that middle low, right? Oftentimes it'll do this actually. Let me back it out real quickly here. Oftentimes it'll do this, right? 1 try, 2 try. I mark up that high, I bring it down to that low, right? And this trend line, that little hidden channel, okay, that's one way to do it. Another even better is to go out and grab a little trap. Okay, this is really where these are. I'll tell you right now, it's tough to lose money on that setup right there. All right. Again, you're buying off a 2 try failure because we're so bearish. We have the range above us, which is great. Going to retest. So the bears have already completed their mission. Okay, there's some little subtle variations of that really increase your odds of success. You know, like I said, I'm going to keep the best stuff coming later on in this video lesson. And then remember, this could easily run back down, 1, 2, back up, and then we grab that new channel and hit that first test coming off that low. 2 try failure into that trap, full, failure pullback combo. Where are we going at that point? Yeah, that's the target, other side of that trading range. Now, how about some breakouts going lower? How about some breakouts? Now remember, if we take out these lows here right now, this is still ripe for a 1, 2 pop and go. It's still ripe for a 1, 2. It's also likely if we see a strong move down, we may end up seeing the market pop up. The buyers try a couple times, they retest that low, and then we get that 1, 2 and back up. Kind of those double bottom reversals here. And, just like on the S&P, don't be afraid of that trade short. If it really pushes lower and you get that pop up off that low, try to rope in those buyers a couple times and use those stop losses, because remember, what's going to happen is they're going to want to retest that low. Remember, anytime you have enough strength in one direction, the odds are pretty good you're going to get a retest of that low. So what I'll do is let those buyers try a couple times to reverse it and then simply use their exits against them. Literally use those stops right against them. Strong move down, that's an easy short. And then it's 1, 2, right back up again, bouncing off that low, right? You're basically going to quick scalp off the short and then really trying to hold that ripper as it rips back up in the opposite direction. Okay, how about some breakout patterns? Now, I would imagine the most important breakout's going to hold below this area down here. So we have to get something taking out this low. Let me get rid of this channel here. And again, these will also apply to the S&P. We have to take out this low. We have to hold a pullback, and we have to really blast. It really needs to blast through this area here. Okay? If it doesn't, if all we get is just a retest, no, that's not enough, right? That's exactly the scenario you want to see for a 1, 2 right back up again. That's an easy money trade right there. Okay, same thing here as we're seeing right now. But if they can hold that pullback here and really start to blast through, then again, we've got a 1, 2, 3 breakdown. I'm going to mark that low. I'm going to mark that high. I'm going to look left and find those prior swings, try to get above prior swings. Minimum criteria, get above the moving average. That's why I like to draw the channels backwards. I draw the channels backwards so I can get above that moving average, fool those buyers into trying to get long. And again, it's a breakout now. Very strong move down. Very good chance here we end up right back retesting that low. I would also keep in mind, too, a grinder, right? Run down, grind down here. Grinders are always very reliable. Well, I guess I can't say always. They're almost always very reliable. Nothing is ever guaranteed, right? So again, we pop down, we grind. Something's up. Right? That's what creates those big moves. We pop and we grind, draw it nice and tight off those lows, up around that big high, and you got it, right? I know I'm kind of like a broken record right now, but repetition is a stone that sharpens the knife of success. Repeat, same way over and over again. If you're looking for a variety, get a different job. Trading is not about variety. Yes, every day is unique, but we literally apply the same systems, the same way, the same techniques virtually every day. Again, they're all a little bit different. But again, if you want to trade a different market every day, different setups every day, you're going to go broke. You're going to go broke. The key is to get used to how these markets work, learn a couple key setups, and then learn to 1-2 punch and take them down when you see them set up. So pop and grind is a definite one as well. Okay, there's a few more I want to cover here on the crude oil. Let's cover that next year, shall we? I really like the way this chart sets up, though, right now, and I'm really curious how this thing will react here tomorrow because, again, we're very bearish right now, but you can easily see, though, we've got some really nice potential here for a possible reversal going higher. How about some crude oil? Boy, oil was not pretty for most of the day today. That's for sure. You could definitely tell the markets are hung up on something with oil right now. Probably the situation happening in Ukraine. Let's see here. What do we got in the oil right now? What would you think what are the most important factors here right now on the oil? One, we're obviously very bearish. That is a very strong move down. Anytime we see a strong move in one direction, we know the odds are pretty good. We're going to get back to retest that low. The odds may not be that good in this example, though. Why? Second big clue in this chart is we are basically one big trading range. If you recall, this is the range from yesterday. Okay, and we talked about the fact that as we go up, buyers once, buyers twice, right, and that short back down. Wasn't pretty, but it eventually got right back into that range. Most important thing, though, is the amount we went above the range. This stuff will give you goosebumps. It's amazing how accurate it is. You can't make this crap up. That's the range from yesterday. And so we run up. We run into that area of resistance we talked about, right? The buyers tried a couple times. There's a couple small examples, a couple larger examples here. They end up rotating all the way back down, and look where we are, right at that pendulum swing. So these are great options where you can combine those two try failures going back up into that range. That's another very important clue. And then obviously you've got range here. It just looks like right now that 103. It smells like 103. I would have assumed that it would have been 100 a week ago, but for whatever reason, 103 appears to be the kind of the magnet of this market right now. It feels like all of these markets are trying to figure out some big range here. We just don't quite see it yet, but it does look like that magnet area. Be right around that 103 area there. So we definitely have, really, again, we're very bearish, but we're sitting at a lot of support areas here, really down below what could be one big multi-day trading range. What else do we have here right now? You'll notice I've combined this low with that high to find that channel. I've got this trend line as we go here. How would we buy it? How would we sell it? What's the best way to make money in this market right now? I love a crown reversal on the long side here. So as these bears try once, as they try twice, it's a very strong move down. So you really can't be too aggressive on this. Here's two ways to buy this. One would be to let those bears try twice, grab that trap off that low. And again, as I mentioned before, I can draw a trend line off that high, off that low, and man, do I love that reversal. Two try failure, but it's kicked up a couple notches with that trap low and off that trend line support. That's a great long setup. Or let's say they go back and they retest that low. Now, this is mission accomplished. Strong move, no more. Now we can be a lot more aggressive on this entry. I don't need all that kicked up reversal here. Now, one try, two try, where are stops? I can now buy right into those stop losses. And then remember, these types of trades, they love to kick. They love to kick. So as the market pushes higher here right now, grab that new channel, find that new channel off the highs, and don't be late to that first test. So again, we retest that low. Mission accomplished. Now, wait for those bears to dig their own grave. Think about where their exits are and blast right into those stop losses. Then as the market rolls higher, we then take out that new channel. And again, could be a trap setup, could be a failure setup, could be a pullback combination. How do I sell it as it goes higher? What do you think? How do we sell it? Oh, and by the way, guys, too, Let's say we go pop and grind, right? Pop up and grind, and grind. Same idea, same idea. Pop and grind. Pretty much everything we talked about on the S&P and the Nasdaq here could also be applied as the market rolls higher. How would I sell this market right now? I would imagine, I'm going to kind of readjust this here. I would imagine this area right there is not really useful. This area right here, I would imagine, will be the most likely place where bears may come in. The problem, though, is that you've got this range above us. And not just that range, it's this range over here. Now, we do have a very strong move down. So just like the S&P, if we do pull back into this area here, and if I can get these buyers to try once, buyers to try twice now we kind of have enough, right? Bottom line is now we have enough juice. Now we have enough fuel, pardon the pun, right? Enough fuel there now. If we pop up, if these buyers are unsuccessful, remember, it pops up and grinds. It's a very different story, but it pops up, runs into some of these areas of resistance. We now see buyers come in. They're trying to get that 1, 2, 3 reversal so they can now buy that first pullback. We talked about that on the E-minis, but they try once to do it. They try twice to do it. All their pain is right there. This is exactly where that 2-try failure, along with that trap entry, comes into play. Deep pullback, range above us, let them try twice, sell right into those stop losses, and then don't forget that trap. Target is back down to retest the low. And then you guessed it, that's exactly where 1, 2, bam, right back up off that low again. Also, as we go lower here, beware breakouts going lower here on the oil. Little bit more dramatic than the Nasdaq and the S&P, right? Oil has that big, and it's not just that low, it's this low over here. So we really got to be careful, with a breakout on oil going lower here. It would not surprise us at all if we saw this thing take off the downside, right? Take off the downside, 1, 2, right back up again, right? Take off the downside, double bottom, 1, 2, right back up again. Grab that new channel. Again, I won't repeat myself anymore for this. New channel, and then back up from there, right? Take that 2-try. Same idea, right? Same idea. Rinse and repeat coming in off of that low. So be very careful here with a 1, 2, 3 breakdown. Okay, be very careful with that short down there. The only way we can really, kind of safely sell down there would be to see if we can get down this area and hold and break through. Not going to be that easy, at least what we're seeing right now. Where's the next objective? 95. There's a big range down there at 95. All right, guys? So keep that in mind as we go lower, right? 1, 2, 3 breakout. Not going to be an easy place to get short. Okay, we really got to see it hold and break there, and then you can incorporate one of the breakout patterns we've talked about here, the pop and grind, the 2-try breakout, the 1, 2, 3 breakout pattern, and I'm sure we'll cover some more tomorrow in the trade room. Now, guys, great job tonight. I'm proud of you for watching all the way to the end of this video. We've now planned our trades. Tomorrow, we're going to trade our plan, and I want to see you there with me tomorrow morning in our trade room. We got the game plan ready tonight. The game plan's pretty easy. The hard part is going out and doing it the right way, not forcing bad trades, not taking revenge trades, being able to do this when the market is moving tomorrow. That's why our trade room is such a great resource for you guys. I'll put all the membership links, the description of the YouTube video, so grab the membership links there. The free course links are there to learn the setups that we use in this video. And of course, you can always call the office if you have any questions along the way. I know I do speak pretty quickly on this video because I try to get a lot of stuff covered in a short period of time, but we can slow it right down. Call the office, we'll slow it down. We'll talk about the best brokers, how to get your computer ready with a little short orientation and get you ready to go to trade with me every morning in the trade room. It's the best place to learn and earn. There's nothing more effective, and I think we have a lot of fun together too, a lot of fun together in our trade room. There's no better place to learn and earn than doing it with me in the trade room. So grab that membership link in the description. Call the office if you have any questions. Again, don't be afraid to drop questions in the comment section. And hopefully by now you hit that like button. hopefully by now you've at least subscribed, set those notifications on there, and I appreciate you guys tuning in every evening and following along here on the video. All right, guys, I'm going to wrap things up here for now. Have a great rest of your evening. Good job. I'm proud of you here today. We got more work tomorrow, though. As always, be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.